Andrew, I'm so glad to have you back on the show with me this week. There's been a lot that's been happening over the past few weeks, and I know a lot that has been happening has been things that you have foreseen in your market reports, because I've been having a little bit of a look at what you've been writing over the last few months, and indeed the annual report that you put out not so long ago. And it has been remarkable how those events are all lining up now. So we've got plenty to talk about today. And yes,
Oh,
I maybe.
oh, thank you. Thanks for getting me back. Look, Catherine, I'm really excited because my peeps are now getting to know your work and they've got a question. And I don't want to take an amateur stab at it when I know I've got a professional like you here. So, look, we have a lot of followers in Australia. What is happening in the Australian property cycle, Catherine? Let us know. Tell us now, because I want to relay this back to my followers as well, because they're as interested in your work as they are in mine. So this is great, and to be able to get it from you is great news. So tell us.
Yeah, so obviously the land cycle, as I like to call it, because obviously when we're talking about real estate, we're primarily talking about land, because it is land that is the appreciating part of a real estate purchase, whereas the buildings depreciate. So I named it the land cycle, and it's got a tremendous amount of research behind it. And that research, goes back mostly to the early 1900s, where after the Great Depression, we saw many academics write extremely detailed papers on a cycle that lasted between 17 to 20 years. And the ones that your listeners may know or may have heard about would have been Homer Hoyt and Roy Wenslick. And that cycle is a very regular cycle of boom and bust. We understand that real estate is the center of most Western economies, in so much as the economic system revolves around land speculation. It's where the banks predominantly extend their finance, is towards land speculation. And therefore, the economy is kind of choreographed around it. And in Australia, it's no different. So the cycle can be traced back quite far in America and in the UK. We have correlated with the 18-year cycle in a regular pattern since World War II. And so we've had three cycles from the mid 50s to the 1974 crash, and then from the 1974 to the early 1990s real estate crash, and then from the early 1990s, obviously, to 2008, we narrowly missed a recession. But I think one of the benefits that I have is I work directly in the real estate market, so I can see precisely how those patterns evolve on the ground. And since 2008, we've been going up to our next forecast peak, which is around 2026. And I think we're bang on for that forecast peak. So the difference is probably in the Australian land cycle is that you get, whereas in America, it's such a massive market. So when the median price is hit in America, and it's a very good leading indicator, but because we're a much smaller market and we're correlated around the capital cities, the median price tends to peak very close to where you get the stock market peak. So in the last cycle, the median price in America peaked in 2006. And in this cycle, in the last cycle for us, the median price peaked at the beginning of 2008. So we don't have that same lead in. But the Australian real estate market, the cycle's been a little bit flipped on its head. We had the COVID stimulus that came in that produced a roaring boom in real estate values in Australia. And then we had the rapid and historic rise in the lending rate, which pulled those reins back very sharply. We would have expected that pattern to occur right at the end of the cycle, under what Fred Harrison has termed the winner's curse phrase, which is the winner's curse phase, I should say, which is the last 1 or 2 years of the land cycle, and which leads to the collapse. So of course we've had a very muted period of some states have been doing quite well. In Brisbane and Perth, they've had rapid land price appreciation. Melbourne hasn't had it so strongly, and neither has Sydney. But now things are picking up again. We've had a couple of rate drops. That's given a bit of confidence into the market. And then we've had the federal election, and of course federal elections come with a host of goodies, and those goodies have been primarily thrown at the land market. And one of those shows is that our Prime Minister from the 1st of January next year will be offering every first home buyer, no matter their income, the ability to enter the real estate market with just a 5% deposit, effectively giving you a government-backed subprime mortgage stimulus into the market. And that really is our blow off phase. So we would be expecting that to produce the last blow off phase in the land cycle. And then we are absolutely forecast to have a collapse at the end of this cycle, which would be a collapse, say, going from, sort of 2027 into 2028. And how fast we get out of that would depend on government stimulus.
Wow. Okay. Well, that's fascinating. In fact, you've answered all the questions. The next question was, are some cities faring better than others? But you've already answered that. So fantastic. Right. So sorry to hijack the podcast or interview or whatever, but I thought I'd ask you a question for once. Right. So
Yeah, well,
I'll leave it
I appreciate
free.
that. It's not many people do ask me questions when I'm doing my own show. It's normally me inviting people on and writing long reports where they've had enough of my voice. They want to hear somebody else's voice, which of course is why I've got you on. And the last two interviews that I did with you were extremely popular. And I think it's because, I mean, not only do you have a solid reputation of forecasting the peaks and the turning points in the market, which I think is quite unique, particularly when we take it down to very short-term forecasts, as in this month and this day, you're going to see a peak. It's far easier to say this is a crash year than it is to say this is a crash month. But I also really appreciated how much incredible experience you've had over the years with going through the GAN archives and the amount of analysis that you've done. You have a tremendous book collection of cyclical material, and these are the things that we draw upon when we look at your research. And like me, you spend a lot of time writing reports and putting these reports out, and then you have to stand by the forecasts, and your forecasts, as I said, have been brilliant. So before I circle on to that, I did want to mention that you are one of the directors for the Foundation for the Study of Cycles, and the foundation is the place where the globe goes for this analysis that was set up by Edward Dewey, and his tremendous body and library of material has been built on over the years. And of course, it had its annual conference recently in New York, and you were the keynote speaker for that conference. And I'm very curious to know what you spoke about.
Well, I was one of the speakers there. So thank you, Catherine. Yeah. You know what? This is really kind of very relevant to everything you and your followers look at, because Edward Dewey really focused on the 18.6-year cycle. That was one of the key things. But let's back up, because a lot of your people might not know the Foundation for Study of Cycles was set up in 1941 by President Roosevelt to see if the depression, the market peaking on the 3rd of September 1929, the price of 386 in the Dow, all the way down to the low there at 44 on the 7th of July 32. If that could have been forecast, and then the subsequent depression that followed that, not to mention the Dust Bowl that came in as well. So, it was a multi-faceted crisis, as it were. There were so many different origins or events there. So the whole idea is that they didn't know then if this could be forecast. Well, of course, W.D. Gann was doing this work at that time. He definitely did forecast this stuff. We've seen the 1929 forecast. That's in the public domain. So we know that this can be done. And of course, what's happened is that Dewey picked up this work. He became more and more fascinated. And he didn't just apply it to economic principles. He applied it to natural phenomena as well. So he was looking at the growth, the variation, the growth and demise or contraction of species and trees and travel and you name it. And everything seems to fit this 18.5-year cycle, or if you halve that, 9 years and 3 months. So, or rather, there's a lot of things that do. So that was what the Foundation for the Study of Cycles was set up for. And then under its current leadership, we reformed it. I helped Dr. Richard Smith reform this back must be 6, 7 years ago, I guess. Time does fly. We had the opportunity to get it going again because it kind of came off the rails under a sort of kind of like slightly rogue leadership for a few years, and some of you will be aware of that. I know several Australian people were involved with that. But what we've done now is turned it into something where we've got a huge number of followers. We've got tens of thousands of people coming in now on our lists. And the idea is just to educate people about the foundation. And also, we've got an app there that helps you forecast. It's a very, very affordable app. It's part of the membership. Helps you look at forecast cycle curves for your own stocks or any data you want to put in there, or markets or commodities. So with that in mind, we decided we would hold the first in-person conference in probably over 20 years. They said 20 years. I think it's longer than that. And we met up at the SUNY in Midtown in New York. And yeah, it was a fabulous 3 days. And I'm going to reach out. Several of your people will have heard of Ray Tomes over there in New Zealand. And Ray sponsored the first day, which is a science day, which really was just, for all the market guys was, yeah, well, well, kind of, that's not so important. But Ray paid for that. He sponsored that. He couldn't make it himself over in the end due to the political situation, but he did sponsor a lot of great speakers who talked about all sorts of incredible stuff, including there was quite a predominance on space weather and human behavior. But also there was a guy there, I think it was Jana Meitinen from Finland was flown over, and he was talking about how dopamine levels influence all these things and how the dopamine levels are influenced by solar activity and so on. So, and then when you look at that, then you can see how when people are more optimistic and pessimistic, they're like, come on, yeah, let's all go buy Tesla, or let's all buy this, or oh, I'm feeling a bit miserable because, whatever micro strategy dumped or whatever, and so on. So you can see it was a really great day. And then we had 2 days of solid market stuff. And what was really great there was that we saw, well, top of the list, we had Peter Borish come in. Well, most people probably don't know who Peter Borish is. I think he was actually a chairman previously. And he was certainly on the board of the foundation previously, but he's actually Paul Tudor Jones's business partner. These are the two guys that made billions, tens of billions, incredibly wealthy guys. And what happened was Paul Tudor Jones wanted somebody that could work data and look at cycles, and Peter Borish was that man. So the two of them got together. There was a documentary on YouTube, which I believe has been taken down, where they were looking at cycles to predict the 87 top, which I believe they did. So, to have this tremendously well-known person in our world swing by was great. To endorse that. Then we had other big names in the form of, well, let me see, who would we know? Larry Williams is very well known, right, in Australia. Larry Williams came along, did a tremendous presentation. Peter Eliades from Stock Cycles Forecast, and these are real veterans of Wall Street, and yeah, these guys are in their 80s, and you'd think they're in their 40s. They've got so much energy. Who else we had? Bill Sarubi, who's a big Astro man and everything, and we had people coming all the way from Australia. There's actually some friends of mine, just that I've known through the GAN world for over 25 years turned up. I won't mention the name. I know actually they know if you're working, subscribe to it, but it's a bit unfair to get to shout them out right now. But really great people, very successful traders. So we covered a whole series of stuff, and Dr. Richard Smith himself is quite interested and researches this notion of how quantum physics might be the force behind how these markets move. Now, look, I don't want to send you guys to sleep right now, so we'll stop at that. But we went from there all the way down to practical trading strategies and so on, and it was really interesting and exciting. And at the very end of it, we had a VIP dinner at Smith and Walensky's in the same room that Warren Buffett has his annual charity event in, his annual fundraiser. And I was just doing the research on that because out of the Market Timing Report sponsored that event. And back in 2018, somebody paid $18 million, which goes to Buffett's foundation, his charity there, just to get a seat at that event. So, it's kind of cool to be in that place there as well. So that was a fun night as well. So whilst we were out there as well, some of us got a chance. This is quite niche, and you and I haven't spoken about this because I've just come to my mind now. But I don't know if you're familiar with the work of Raymond Wheeler, who was
Yes.
very famous with regards to climate cycles, and it not just like, but he created a thing called his Big Book. It's 6 foot long, and we got it's in a private area, and we got access to that. So we spent the afternoon studying that, which was really exciting for us nerds and geeks, you know. And you could see how he wasn't just plotting climate and markets; he was plotting geopolitics, religion, um, uh, arts, entertainment, and the trends in these things. So that was pretty exciting, you know, if you don't have a life and you like looking at these things. So we did spend a good few hours there at the Baruch University where it is. So it's pretty cool, yeah. And it was just great to, you know, the other thing is kind of we're still kind of in the throes of the pandemic, and you know, people are, you know, like we're still, you know, you. I mean, okay, you and I are opposite sides of the world, so it's not like we'll be hanging out there in Melbourne. But you know, it was great to see people in person, and you know what you did rather than having a Zoom event. You know, you can then go to the bar later. In fact, we had a cocktail party every night, and then you know went off and grabbed dinner or fell into an Irish bar one night and things like that. So it was great fun, really good fun, and. One of the things I was really excited about is the amount of work that's been doing on human behavioral cycles and sentiment and so on as well, not just markets. So it was a lot of fun.
Yeah. Well, I mean, the human behavioral cycles, of course, are the market cycles. I think we recognize that we all behave in a certain way, and the best way to monitor that is via a stock market chart. So, you know, hence why we sort of all gravitate towards that medium for identifying the cycles. I interviewed Ray. I mentioned this to you last time, and he came on, and we were so fortunate because he opened up his presentation ad hoc during the interview and said, well, let me talk about some of my research. And 2 hours later, we wound up the interview. But I think these things are so important because, of course, everything is a natural cycle. We are part of, you know, the natural animal kingdom where our DNA and our cyclical behavior and our behavioral patterns are very easy to identify when you get down to studying cycles. So that sounds extremely exciting what you're talking about. And have read some of Wheeler's papers online. I didn't realize that he had written such a big book. So that's a bit of exciting knowledge to have. I,
A collection of the facts rather than a written book. You know, he's got it all set out in different lines, and he updates them for each year and so on, and each decade and each century and so on. So you can observe the trends by looking back. So there's lots of little paragraphs scattered around all over this page. It looks random, but it's not at all. Yeah.
that is interesting. I am very curious to know what it was that you spoke about in your keynote speech. Were there any insights there that would benefit my listeners to what you were focusing on?
I can give you an overview because one of the deals was they weren't going to put out what was said at the conference because some of it was quite different and some of it was, well, it was all quite exciting. But I'll give you some teasers. And what we certainly my presentations, I wanted to do something different. And basically, the overall concept was, can we use markets to decipher human behavior? All right. This is in two parts. So the idea is that, you know, for example, I'm a very technical trader and I use certain techniques, and we know when prices reach certain points. So, you know, look, a lot of people, your people follow GAN. So, you know, they know about the angles. So, you know, when a price hits a certain angle, it'll reverse, that sort of thing. So, what if it is that an element of your life or elements of your life hit these angles in your own world, right? So, actually, maybe we haven't had this conversation. Maybe we have. I don't know. But the whole idea is that let's back up because the premise here is that what is a market chart? It's a bar chart, and it's a bar chart of the sentiment of that day, right? That's the first point to make. The second thing is when you put another bar next to it, you get the relative change in sentiment from the previous day to that day. So, for example, if we put that into our personal lives, say, how did you feel, say, last week or whatever, you know, last Thursday, or maybe 14 years and 3 months ago on a specific day, you probably don't remember. You don't remember if you woke up feel okay, had a good morning, average afternoon, and you felt about the same when you ended the day. So your bar effectively is a flat bar, maybe has an up and a down, and it closes where it opened. But what if you had a great day where you woke up and you knew you were going to do an amazing interview and the interview went really well and you got lots of sales or whatever, you made some discoveries, breakthroughs, new real estate clients came in and you sold a property for top dollar and it closes out at the high. So you've got a really big up day. So you can see your sentiment was great there. So the idea, for example, here is that you can gauge your own sentiment as it heads up in these blocks. And, I believe that our life, you can plot this sort of stuff. I think maybe we did talk about it. I can't remember. We've talked about it so much. But this was the concept there. And the idea then is that if you were to hit that Gann angle, or if you were to hit, like, we know that when a market hits a Gann angle, it'll likely reverse within certain considerations, especially if it's on a time cycle. But we also know when you double the range of a price, quite often you'll see resistance there or support if it's to the downside. So, is it true that your market, your personal market, say your health market moves up to doubling the range and then it reverses at that point? It's like, what about your relationship market? What about your wealth market? Health, love, you name it, there's different sectors, right? So all these sectors go together to make the Catherine Cashmore index or the Andy Pancholi index, and things like that. So can you predict that? So that's what it was about. But I'm not going to say too much more than that because it was a bit groundbreaking. And I know the foundation want to use that for recruitment and sales and stuff. And then we looked at a more advanced roadmap of what lies ahead geopolitically and market-wise over the next few years, for the next 10, 15 years, based on some of the cycles work. So we looked at some of that in one of our previous interviews, but I've added a bit more to that to just flesh it out a bit. So again, that's the overview there. But if we take Larry Williams, he showed us his trading techniques and some really high probability setups. Peter Eliades showed how he called the high in January, and again, that was something we did. We talked about that. There were interesting. What's interesting is the way he called it in a different manner to we did. Lars von Tienen, who's one of the directors who creates who's programmer behind this, showed how to do really advanced stuff with AI in these cycles. So for the real geeks out there, and that's probably where we should be, being at the front end of the curve. So it's very exciting. A lot of stuff. Bill Sarubi gave us an overview of what he thinks is going to happen in the second half of the year. And as I say, somebody talked about dopamine. Somebody talked about lots of people talked about space weather. There was just lots. It was fun, and there's a risk of getting geeked out, but in fact, it was the opposite. It was a lot of fun, and the venue was superb. It was right in Midtown, and as I say, to be supported by all these names was fabulous.
Yeah. Well, I mean, the what was going on in the rest of the world while you were over there is probably where we should swing our attention to, because this was something that you have been very focused on forecasting. And as I mentioned in my last interview, I've interviewed you and I've interviewed David Murrin, and I know that you're both friends. And
Yeah.
this ongoing forecast of mine also over the last few years has been about World War III at the peak of this cycle. It's not only my forecast, it was a forecast that was put out actually by Fred Harrison, who is one of the most preeminent forecasters of the 18.6 year land cycle in the UK, and has written some tremendous books which anybody who is interested in this research should go and read. But I think we've all understood that there is a time period that has been flashing for war to erupt, whether you look at the Kondratiev cycle, whether you look at the 84-year war cycle, and how that actually manifests on the ground has been the focus of some of my writing, and that's where I've pulled in yourself to talk about it, and David to talk about it over previous interviews, which is what was happening while you were in New York, of course, was that the war between Israel and Iran broke out. Israel made a move on Iran, and then we saw the US get involved. Now, this was something that you forecast. So I'm can you elaborate on what it was that you put down in writing? I think it was particularly in your annual report. And with your permission, of course, we'll talk about this, but I'll put those, some of those snippets into the
Yeah, but
um.
by all means, yeah. Yeah, so well, there's two things. Let's work it backwards because the June report actually said this is the time. May we also forecast mid-June as well as a critical point. Now, the whole issue with Iran and Israel had been ongoing anyway over the last several months and year or so. But what was very clear was what the year ahead report forecast, and I think I said that the first half of the year. So I think what was the American intervention was it's the American intervention that is critical because that's the game changer because the two countries, the other two nations were at war anyway, or at least have plenty of issues. Um, Going back to the year ahead report, what that brought up for me, and this just works, even though it didn't seem likely at the time, but was this notion that America and Iran would be at loggerheads. And that's because if we go back to 1979, we found that the Ayatollah Khomeini came out of exile in Paris and went back to Tehran, and then we found that as we went into 1980, we had the American embassy hostage crisis at the back end of 79 into 80. So this is a 45-year cycle playing out. That's the 45-year, half the 90-year cycle. So this is what was playing out. So we knew Iran would be in the news. And because of all the tensions there, which, ran up to all the way to Jimmy Carter was trying to handle it, and in fact, that was sort of the final nail in Jimmy Carter's coffin, where they tried to storm was it the stadium or whatever, and the Americans to release the American hostages, and that failed. People got killed. I think a helicopter crashed, and the whole thing was a mess. And of course, then Reagan came in after that. So the whole thing was this idea of history repeating in 45-year patterns. And there were some other patterns as well. So this was that. But then also we're in the context of the 82 to 84-year war cycle. Again, we've mentioned this in other ways. And if you take 1939 and add the 82 to 84-year cycle, that put us on alert really there from 2022 to 2025 effectively. Well, what happened there? We saw the Ukraine situation, and everybody said, "Well, that doesn't count." And somebody was trolling me on, I don't know, somewhere or another, saying there is no war. I think, well, 54 nations are involved with this war, And then, of course, this escalated, and now America has been using B-2 bombers to bomb sites in Iran. So what's happened is that we've got two things coming in. The World War window was open anyway. Everybody can predict the Third World War. It's dead easy because it follows the Second World War. Who's timing it though? Not many people are timing it. I'm talking to people. Yeah, there's going to be a Third World War. Oh, for God's sake, let's put a bit more effort into it. So the idea of timing these events is quite critical. And then the other thing is that there are two critical points on the Second World War. There's the outbreak of the Second World War in 1939, and then there's America joining the war after Pearl Harbor on the 7th of December 1941. So what happens? You take the 82 to 84-year cycle from 1941, and boom, there's your 2025 number. So now America's in. This is how it works. It's just incredible, how this stuff works. So that was sort of this idea that these cycles were coming together that we talked about in the year ahead edition. We knew Iran and America would be at loggerheads, and it's not over. I know it's gone quiet right now, and you know, just this last week or two, but it's not over by a long way. And I know Netanyahu's been over in Washington. I don't know whether the American intervention was just a quick appeasement or whether America really has entered the war. And well, let's not spoil the story. But I've written a bit of a story about where I think it heads in the latest edition of the report. But if anybody wants that, but a lot of you are already getting it, so you'll know. I don't want to, because people have already paid for it. We'll say where that heads to next. But the point is, America's very much involved in the situation, whether we like it or not. And I do think also as we as we head into July and August, things are going to escalate. I definitely do think they're going to escalate because the other thing we're going to see is we're going to see a 35 to 36-year cycle. We're going to see the 35-year cycle from Saddam's invasion of Kuwait, which then triggered Operation Desert Storm in 1991. So we've got, from 1991, we've got the 34-year cycle, we've got the 35-year cycle, and that 35-year cycle is pretty important. We know that's an important cycle there. It's one of the alternative stock market forecasting cycles there that you see a pattern that plays out every 35 years, but it also plays out for more esoteric reasons as well. So there we go. So that's what's going on now. I do believe we're in the calm before the storm. Intel wise, so I've got to be careful what we say when we're putting things out in public. What I can tell you, because you can open source it, there is a very large buildup of military aircraft in Britain from America. The bases are seeing bombers coming in. They're sitting there, ones that are not usually there, that from America. There's all sorts going on. Now, as with all these things, everything has consequences. I'm not convinced America wants to have further intervention in Iran, but I suspect it will do. I think if that carries on and escalates, then I think the Western countries supporting that. Well, right now America's going it alone, but Britain has, given support. Australia has as well. I always think Australia's sort of generally out of the limelight, but I do think we're at risk of homegrown terrorist attacks here in Britain and in America if this kicks off. So, Iran doesn't have that stronger capability against, say, America or Israel, but they do have a reasonable capability that should not be ignored. So, and of course, I say the terrorist angle is huge.
I yeah, I mean, I've been writing about it myself, and I think I put out a report, I can't remember, it would be 3 or 4 weeks ago, and it was regarding commodity prices, because one of the forecasts that I have had has been that, as we move into the peak of this cycle, that we are going to get a commodity boom, and to that point, and again, this was before the attack on Iran from Israel. Up until that point, we hadn't really, things have been very ordinary. There hadn't really been much movement in commodities. And my argument in that was, we're only going to see a turnaround in this if we get, what could turn this around. And war was one of the things. And this war escalating is something that, we've all been forecasting. So that would be likely to happen. Now, of course, the war escalated, as you said, and then, now everything's sort of settled down a little bit. We've got a ceasefire, and we've got Trump back doing his what he got elected on, which was his role as, or one of the things he got elected on, which was his role as peacekeeper. And he's very eager to keep that title and to keep that mantle, and not to let America get involved in war, so we've got this sort of temporary ceasefire going on between Iran, and now they're trying to negotiate a ceasefire in Gaza and the return of the hostages, which will be very grateful for people there, I'm sure, on the ground. But at the same time, we did get a spike in oil that took off, and of course today, as we're talking now, there's been a huge spike in copper prices, which has been, thankfully, one of the forecasts that I made, a month or so ago, which was, we have to see this. I think this is where the power of cycle forecasting comes in, because you make these forecasts and you're pretty confident based on the patterns of history that this is what we should be seeing. And then you sit back and you think, come on then, let's see this manifest. And you sort of wait for this thing to manifest, is like bated breath. Is the forecast going to work out? And thankfully at the moment the forecast is suddenly coming to fruition. But of course you pulled up a chart for me earlier, and so I'm going to hand over to you, because it looks like you've pretty much pinned the timing of this one also.
So I don't know if you can see this here. But this is a monthly chart of copper going back to 2006. And the key point really here is this idea that wherever we see our histogram spikes, which are known, they're there, you can see them projected through to the end of 2026. Wherever you see these large spikes, we tend to get major trend reversals. And this is just one cycle overlay. We do use multiple ones before people say, wow, you missed that one and you missed that one. It's kind of like, yeah, okay. So it's part of a more complex procedure. But what we did see was this huge spike here coming in right now. and the last month or so, and that's really what has aligned with this blow off move that we're seeing here. So you can see how these previous spikes have coincided with significant reversals. So the idea is that they're not the be all and end all, they're not the holy grail, but they tell you where to look and they give you an idea of when something's happening, because everybody knows that a war's going to break out, the Third World War is going to break out, but they don't know when. People have an idea that certain things are going to move and they don't know when. And then looking at from a more practical point of view is this one here, the futures chart for copper, and this is just a daily chart. So on this, so this is the stuff we teach in our market timing report trading course. But the idea is there is what's known as an Andrews pitchfork, and we do various bits and pieces to make it really useful. And these lines become target points. They become support and resistance points. So you know that when these points are hit with a time cycle, you can get in there and manage the risk using the formula we teach there. So from going, you can see how we went from the red lines, the thick red lines are the main points of the channel here. So with this in mind, you can see how the halfway lines have also acted as tremendous support and resistance. And the key point is this move we've had yesterday. So it suggests that, we will probably see a little bit of a pullback when we get to somewhere like 5.7, 5.8. And then if we head up from there, then, we could easily head up to 6.1 and then 6.5, so that's how this works. And just looking, if you wind this back historically, you can see how these lines have acted as support and resistance all the way back. So that really is one of the keys we have to forecasting. So not just being able to time these things, but be able to trade them with good risk management and also know where exit targets are. So, if you think this is looking bullish, then yeah, you'd think, well, actually, yeah, that's a target point. So we might sort of see a pullback. You'd manage your risk there, protect the position, and then expect it to go higher. So that's just one example here with regards to that. And what I can also show you here is in our commitment of data platform here, that actually this is a geopolitical risk thing here showing. I'll just bring copper up here. What we're seeing here is that the selling in copper had been dropping off. And actually, this is the smart money. So I've got rather a lot of data in here. Get people yeah. The point is that the amount of smart money smelling had been petering off, and we've seen this move up here. And in fact, the hedge funds were at peak buying over here, and they've been selling it. The hedge funds are wrong at extremes. So this has been creeping up, but our indices show that only one of them is suggesting we're close to a major high. I mean, these might change very quickly in the next set of data at the end of this week. But at the moment, this is a a confirmed breakout to the upside. So that's a very interesting situation for the world in manufacturing. So you can see that, and then just in the shorter term here, if we look at the some of the seasonality, you can see that July tends to be bullish, but we tend to see highs towards the back end of July. So we've got a lot of odds on our side here with regards to copper there. So you can see how that all comes together. Yeah, so that was a great call on your part there, Catherine, and the technical and cycles data back that one up as well.
Well, what's really interesting, and this is one of the beauties when you write a publication, and I think this is why I as much as I feel very honored to have landed in a position where I have the chance about writing about cycles, because in doing so, you're forced to do research and to put the reports together. And one of those pieces of research that I did recently, and I called it the profits of the land cycle, because Dewey's analysis, when he wrote the cycles of prediction, when he wrote that book, and in that book, he focused on the 18.6-year cycle. There's a whole chapter on it. And in that chapter, he goes back to Roy Wenslick's research. And Roy Wenslick, I'm very fortunate to have a lot of Roy Wenslick's early writings. And in those writings, Wenslick talks about the researchers that he went to get his information. Warren and Pearson and Riggleman, and I'm trying to remember the names of all the other researchers that I included in this report. And when you go back and you find their papers, which actually cost me quite a bit to find these papers and to find somewhere where I could download them, and you know how these sites sort of, you end up charging you hundreds of dollars to download something. But the amount of research that was done on how commodity prices align with the land cycle, how gold prices align with the land cycle, how these things interact was quite tremendous. And that's where I sort of bow to the greater ones. Really, all I'm doing is doing the research and then repeating what should happen in this cycle, and then using my own insights on the ground. I haven't created such a wonderful system that you have got, which pins these exact timing, which is why you're here doing the interview with me today, so that we can glean from your knowledge. But I do know that in my forecast, we're coming up to these pivotal points. We spoke about this in our last interview about how 2025 should be a year which is good for stocks based on this decennial cycle that you forecast, and of course all the other things that all the other mathematical cycles that you use as well. But 2026 and 2027 are the 2 years that my subscribers are watching very closely. And I'm putting you on the spot a little bit here, because it's far more likely that you're going to get a significant downturn in the year ending in 7 than you are in 2026. 2026 does have some flashpoints in it, and I am curious as to what your thoughts are. Now, I know you don't study the 18-year cycle as on in its singularity as much as I do. You don't put as much emphasis on land leading that cycle. I think it's one of those things that when we, as land people and as Georgist people get very obsessed about. But what are your thoughts at the moment, based on where we're going over the years?
Well, I think let's go to the back end of this year. In our year ahead forecast, I thought the year would end up higher. I still think it would end up higher. I did think there'd be some troubles along the way. I think we've seen those. I think we might see some more. I think we might see a bit of a currency crisis coming up in September. There is one particular currency in the spotlight there. But I do think that we should head up. Years ending in 5 tend to be the most bullish in terms of the US stock market. I think years ending in 7, I'm basically repeating what you said here. Years ending in 7 are going to be, usually see some pullback. Every year ending in 7, apart from 2017, saw a significant pullback. So unless that cycle's broken, I suspect we'll see something there. I think that one's going to tie in with the work you do and the other people that, the other people that look at the 18.6-year cycle. And then the bigger picture for me is the 90-year cycle from the outbreak of the Second World War, peaks in 1929 and 2029. The 100-year cycle from the 29 crash peaks in 2029. So I think 2029 is an interesting year. If we look at the 100-year overlay, it was a big bull market for the most part, albeit with some pullbacks for 10 years. If you look at the 90-year overlay from the 1932 low, we then did tend to see more. It wasn't a complete bull market, but there were plenty of upside. So I think there's more to the upside, but I think you've got to be very cautious and you've got to be able to manage the risk very carefully.
Yeah, I mean, it's in Larry Williams' book, The Right Stock at the Right Time. I probably quoted that title a little bit wrong. The right time, the right stock at the right time, or whatever, but where he says regarding that decennial cycle, how important it is. I think there's a little quote in there where he says, oh, if you want to make your grandkids wealthy, give them this knowledge and put it in a drawer, in their sock drawer or something, so they can pull it out later in life and basically trade based on this decennial pattern, because it is such a brilliant way of giving you a roadmap for the annual forecast, isn't it?
Yes, absolutely. Anything that gives you an edge. Remember, these are just all probabilities or even possibilities. But remember, you're up against people who are clueless, right? Remember, you're up against the 95% of people who go broke within 6 months. You're up against those people, the newbies that came in yesterday, the day before, 1 minute before we started recording and who came in last week. You think, oh, I've got some money, I've just saved some money, or borrowed some money, or I've inherited some money, or I won a bit of lottery money and I'm going to go and trade because it's dead easy. And of course, what we all know is that trading and speculation is a profession. Gan wrote about that. It's a profitable profession, but equally, you're not going to go and see a doctor who just watched a YouTube video yesterday, yesterday morning said, I think I'll be a doctor. I watch a couple of YouTube videos and now he or she's opened up their own clinic, and, worse still, next Monday he's planning on brain surgery because he watched a couple more YouTube videos. It just doesn't happen, right? So, when we talk about 7-year itches and 7-year cycles as well, how long does it take to study to be competent? The first 7 years in anything tends to be an apprenticeship, especially in medicine. You're learning anatomy, you're learning to interact. And the next 7 years, you're putting that into practice as you become a competent doctor. And then, after 14 years, you become the master, 14, 15 years, you become the master of that. And that's the consultant you want to go and see when, you've got an issue that needs some decent medical attention, so that's how it works. Yet people think, oh, I can be a trader, boom. And, I've got friends who are day trading, literally start, well, what have you studied? And it's, oh, no, I just go out there and watch YouTube. Somebody says it's going, such and such is going up, Tesla's going up, SPY's going down, this and that. And of course, they're all pretty much wiped out pretty quickly because they don't understand how to manage risk. And to be quite honest, it's the most boring thing, but it's the most important thing. It's managing risk. That's it. Yeah. So
Yeah, gambling really when you don't do that rather than trading.
exactly.
Yeah,
Yeah. Exactly.
there's a line
Yeah, and
between
that's
that.
why as I've always said, my background in aviation and flying wide-bodied jets, it's all about reducing the risk and making incremental gains. So, for example, if you knew a time period was coming up, something's going to be happening. It's this whole joke that I was making about, well, everybody's been predicting the Third World War, but nobody said when. And it's obviously it's going to be the next one because it comes after the Second World War, which came after the First World War, right? So, and guess what? After the third one, there might be a fourth one if the third one doesn't wipe everybody out. So it's sort of dumb idea that actually the question is when. If you know when, you've got an advantage, right? Because you've got a time advantage, you know when to look. Then if you study chart patterns, you know when a price target is being reached. So we know that a lot of these things work in terms of, like doubling of the range and all the other stuff we teach in the course and the final price target and things like that for markets, which Gann veiled in his stuff. So, which is why he was able to predict many significant highs and lows. So we know all this stuff can be done. And if you stack them all together in an orderly manner and you can find order in that, then you've really got the odds on your side. And if you can leave that together with the patterns to your kids and grandkids, then definitely they've got something. But of course, human behavior is based on hope, fear, and greed. So they're not going to give it the attention that they should do when they inherit that folder with all that information in, or whatever it is, that video these days. And they're going to go and have a go. They're not going to have any skills in terms of risk management. They're going to lose it all. And then they're probably going to sit there and think, I wish I'd listened to what Uncle Ernie had said, 10 years ago. And then they'll start that journey and they'll come and subscribe to your stuff and so on. That's it. So that's how it works. There's no new thing under the sun with human behavior.
Yeah, I mean, I think one of the things, because I wrote a report last week and, I was talking about a little bit what I was saying to you earlier on when you asked me about the Australian land cycle and, where are things now going here in the real estate markets. And we do know that, the disruption that World War One produced to the cycle, and, obviously any war that's going to take speculation out of one market and put it into another market, it's going to disrupt the market that it's taken speculation out of. And you're not
Yeah.
having running around flipping houses when they're going out to war and in a ground war. And I think, that's the one sort of thing of, well, if war does break out, what might it do to the markets that might shift us out of what we would normally expect in a cycle? Because a world war, as you say, isn't something that happens every day, and it's something that's going to play out in its own particular peculiarity when it does happen compared to what we saw previously. So I don't know whether you put any thought into that as to if we do see war, what that might actually
Yeah.
do. Yeah.
What tends to happen is at the outbreak of war, the market will generally dump quite sharply, but they usually recover because war economies require an increase in production. So it generally stimulates the economy. So that's what tends to happen. But if you've got an extreme event, a nuclear event, then there's going to be less of a recovery because there's going to be significant damage done. And of course, we're now in this age where we did see, where we have weapons that could wipe us all out. And last time this happened was 1962. The Cuban Missile Crisis, where the world did get to the edge of nuclear war, and then they realized, well, we're just going to kill everybody, and everybody backed down, fortunately. Well, look at if you add 62 years from then, that takes us to 2024, and it was sort of the back end of 2024. So, it's only a few months ago. And that sort of cycle is playing out exactly now. Putin's been threatening the use of nuclear weapons in Ukraine. And of course, we've got this now standoff here. The whole idea that the Iranians have nuclear weapons is so this is a standard American, Western, British storyline. They use this with Saddam. Oh, he's got weapons of mass destruction. They never found them. They never found them. There never were any. American intelligence, even, I think, who was it? Was it Tulsi Gabbard that was sacked? If I got the right name, I'm not sure. Saying that there is no credible evidence of any threat. And I think that probably is the case. But remember, I think we previously talked about the colonization attempts and the idea of superpowers. So it's very easy to dupe everybody with this idea that they've got this and we've got the proof. Nobody's got the proof. And to be quite honest, I don't really think the theocracy in Iran has been as much of a threat that the Western nations, and especially America, have played it up to be. Everything has ticked along. Yes, there've been a few little bits and pieces said, but there's been no credible. There's been a lot of rhetoric, but there's no, very little action and so on. And a lot of the Iranian people themselves are not particularly huge supporters of the theocracy as well. So, the whole thing is really about exerting control on oil. And my personal theory is that after America pulled out of Afghanistan, China very much got in there. They moved one huge country closer to the Straits of Hormuz, and now Iran is the only buffer between where America is with Afghanistan and Iran, and therefore Iran is a more prized territory, because if that gets too much Russian backing, it's going to be a credible threat to the control of the oil in the Middle East. That is my view. And it might be controversial, but I think that is the case. But I think, as ever, the West intervenes. I mean, you have to look at, this is a very controversial statement I'm going to make, but I have been to Iraq under the leadership of Saddam. Everything was pretty functional. Everything was pretty nice. And for the most part, people were happy. I know the Kurds were not particularly looked after, but it was a stable nation. Okay, he might well have been a dictator, but for the most part, it was a stable nation. So Iran has generally been stable as well up until now. Now, all these places are destabilizing because of Western intervention, and Western intervention wants to do that to control oil and also effectively give projects to Western multinationals. Highly sort of controversial what I'm saying, I guess. To some, it's not the narrative, but I think that's the truth. I think we need to look at the truth. We don't hear the truth because everybody's backing some sort of personal thing there. And you have to remember, look at who the leaders are at the moment. Some of them are not statesmen. They're not career politicians. Trump's an entertainer. He's a TV personality. He's not even really an entrepreneur. He does license the Trump name. His father was the entrepreneur. Trump's just a TV personality. He's a self-promoter. What's Vladimir Zelensky? He was a comedian, right? And he won that election through social media. Look at that. Trudeau was another one of these. Justin Trudeau, not Pierre Trudeau. His father was a proper politician. So they're all people that are good at self-promotion through whatever the current media is. So we're in the hands of interesting people, not necessarily those who know what the greater good is. And yeah, sorry, Catherine, go ahead.
Well, I was going to say, I don't think that, I think it would be, I think all of us would realize the foolishness of thinking that anybody who was working for the greater good would be able to rally a nation behind them to become into that role. It's not a role that I think most of us would ever even want to be in. And I agree with you. I think, especially the form of economics that, I sort of specialize in, which is looking at land, and land meaning all of land's resources, because land is everything around us is created from land, and it is land that fuels all of our modern needs. And the thought of who is going to control the access to oil and the price of oil is obviously going to be the motivator for both East and West. And that war is going to continue on, and there's going to be all sorts of motivations for that war. I think the other aspect, of course, that plays into me personally is my own association with Israel and the
Yeah.
friends, sort of close people that I have on the ground there. And I find this beneficial in the sense that it keeps me very grounded about what war feels like. And I'm not just talking about what's happening in Israel. I have many people that have worked for many years on trying to bring peace between Israel and the Palestinian um, territories also. So, the level of destruction that's happened in that area has been quite immense. But certainly from on the ground, the people that live in Israel, the threat from Iran is very real. When you live in a country where you have within bombing distance somebody that's screaming for Israel's destruction and actually has a clock counting down to when they're going to wipe Israel away, that's a very frightening reality. And when those bombs were launched towards Israel, you have, I think it's about 7 hours to wait and see whether you're home and whether you yourself is going to be wiped out as you sit in the bomb shelter waiting for, for that time. So I kind of like, I see all of these things playing out, and I think that the reality of how horrific these events are to have to live through, where, as you say, we are in the hands of complete maniacs who don't have the greater good, is quite a terrifying prospect. We look at it with interest at the moment within our comfortable atmospheres, thinking, what's going to happen. And you yourself, I mean, you have some close contacts in Israel as well.
I
We've
do. I have a lot of very close. Yeah, in fact, I've been speaking to them quite a bit, and I've been in all these countries over the years, and I've even been in Israel, where we have had to head to the air raid shelters and so on. Yeah. So yeah, I mean, I just think what I was really I think that this is being accentuated by the present major powers uh, at the moment, and it could have been a case of let sleeping dogs lie, but we are where we are because the cycles are in for war, and that's where we're at. So, and I don't think it's over by a long shot now. Yeah, I think it's I think unfortunately this is going to escalate into a different type of warfare because everything has consequences. And what's slightly concerning is the behavior of some of the statesmen, as it well, not statesmen, but the leaders who are not statesmen effectively, who are doing things more egocentrically. And this idea, well, I might do something, I might not. Well, hang on a minute. This is really not about um, what you want to do. It's about the greater good of the different countries involved and so on. So, but that's it. That's what happens. That's what happens every every 3 generations, 60 years, people haven't lived through wars, and there's hardly anybody left alive that lived through the Second World War now. So there's nobody to stop you saying, look, it was pretty awful. You really don't want to do this. A lot of people died and so on. So that's why we're back um, into that sort of window of world events because humans don't learn. That's it. We're driven by hope, fear, and greed, and we never learn, and things go round in circles and cycles.
Yeah, I was talking to my mum the other day, who's in England, and she was relaying to me the story of her mother who lived through the Spanish flu. She was saying, "Oh, I wish I'd asked her more about it, about what that
Yeah,
experience for her." But at the time, we just didn't talk about those things. And it reminded me of this. There was a meme that sort of went around on Facebook at the time when we had COVID about, which was think back to that time of those people that lived through the Spanish flu, because they lived through that period of time, the Spanish flu, which of course was 1918 to 19 20, and then they had the recession that sort of came on that, which was 1921, and then they lived through the Great Depression, and then they banged into World War II, directly
right.
after that. How many resonances are there in what we're sort of going through now? Complete, again, it's like where you say history
Yeah,
right
yeah.
quite repeat, but we had this terrible impact from what happened over COVID, and then we sort of went straight from that into that we had the COVID recession, and then we came out of the COVID recession, and we've got into these regional wars breaking out, and potentially a world war. So it's and another recession that's forthcoming as well. So good times ahead,
Yeah,
really, about
I was
it.
going to say, yeah, the happy days have gone for the moment by the sounds of it. So, yeah.
Yeah. So the forecast ahead to wrap things up,
Yeah,
final. Yeah. Where are we heading to? Give us some gold to finish out
right.
on.
So, the Iranian issue with regards to America, I think, continues into next year. Okay. I think that if we overlay the last Iranian American hostage crisis and all the rest of it, that carries on into next year. I think we see instability with China and Russia, Ukraine continue. Um, all this stuff simmers really into the back end of this decade, I think, in my opinion. Yeah,
Yeah, okay. And the market's still good for this year, and then obviously,
I think so. Yeah, yeah. I think we are going to see some blips. I think we're going to see some currency issues in September, definitely. Yeah. And yeah, so there are exciting times. There's a lot of opportunities if you know how to analyze markets and trade them. This is going to be the best time ever for you guys, as long as you know how to manage risk. Yeah,
and of course that brings me round full circle to which is exactly what your service is. And I must stress again, and I've put this out before, and it's one reason that I talk to you, and that is that you run a service which gives these key time points, which are immensely valuable to anybody that is an active trader in the markets. Should definitely be looking into. And when I put the report out with this, I'll be putting out a coupon code that people can use, that you've very kindly given us, that my subscribers, if they're interested and if they're actively trading, can come and use to discover how to do a bit of forecasting themselves. Is that right? There's a bit of a training
yeah. So
course that
there's
people.
well, let's just explain exactly what's going on. There's two things. There's the monthly report, which I know several of your followers have already picked up. So that's available. It's $149 a month. There's a geopolitical section and then a market section in it with its key turning points across crude oil, S&P, gold, dollar index, euro, and Bitcoin. So that's there. Again, there's a better option for a year's subscription. There's a 28-day trial on that if you've never tried it before. And then the other thing that we talked about, which is you mentioned a coupon code there, we have the market timing report trading course, which shows, so for example, some of the lines I showed there on the on copper and so on. So that does show you how to do long-term forecasting. It doesn't show you what's in the histograms. It would take me 100 years for you to teach you that sort of stuff because it probably take 30 years. It took 30 years to more than that to derive them. It doesn't show you that. I want to make that very clear because I know people want that holy grail. I'm afraid it's not for sale. Well, it is for sale, but it'd have to be a big check. So, but joking apart, the trading course, what happened was way back when, pre-pandemic, we met in London for 3 days. A promoter charged £25,000 a head. 20 people turned up and we taught them this trading system, and every one of them has done really well. Since then, I've put it on the internet for $2,995 US dollars. It's got all the main techniques in. It shows you how to forecast a final high, shows you how to manage the risk, shows you how to find support resistance points and targets for entry and exit. And that's to say, that's $2,995. What we did back in January, we knew the major high was coming in the S&P 500 for that time cycle period. And we held a masterclass in advance so people could trade that. And that was a 2 day event. I think it was 3-4 hours a day. And we've captured that masterclass, and we've been selling that for $2,000. So we're going to include that if you use the code that you've got, and that's really only for your people there, Catherine, if they want to do that. And we're going to keep that open for a few days. So that's for the trading course. Let's be very specific. That's the trading course, and the other is for the market timing report. And then we also have our seasonality platform as well. So that those are the things we offer. But most importantly, just hope you enjoy this material that you and I are creating by playing geopolitical and market tennis here by knocking the ball backwards and forwards over the net. So that's what's there. And sure, Catherine, guide people in the direction of those links. And but with regards to the course, we've had a lot of very satisfied people. In fact, one of our top private personal guys has gone well over 10 million in profits just from one of the techniques in that course, believe it or not. But everybody's done well with that. So we're here here to educate. And it's the same system I used when running a fund. In our last year, we closed up 34%, beating the S&P by 49%. That was 3 years ago. So there we go. Yeah.
Yeah, really exciting stuff. So I'll put that out with the report that I put out, and I'm sure that there are people that are going to be interested in that. I think it's a really reasonable cost, to be honest, for the information that you give. So I hope people understand that. I mean, to go along, I've been to many seminars over the years. I've been to many GAN seminars, and the GAN seminars, they charge that type of money and far more to go along. And you really don't learn an awful lot about how to trade markets. You learn a lot of a lot of random information, and then you come out often more confused than you walked in, with mountains of paperwork and to sort of work through in snippets and here and there. But to actually have that, and to have it as something that you can watch and practically learn the practical application of it, I think is really very good value. So I really thank you for that, Andrew. I know that you
Let me
have
just
a
clarify a couple of things there. Some of the techniques are based on my study of GAN because, as we've spoken previously, I've had the honor and ability to also catalog the entire GAN collection. But I did attend a lot of GAN courses 20, 30 years ago. I started teaching it myself, and very few people put it all together. So I've put together what works in trading. Some of it's GAN, some of it's other stuff. It's completely different from GAN, but it works better. So that's it. And what GAN really didn't make very clear that works in the present day is the ability to manage risk. So we show you exactly how to do that. So that's it. Yeah.
Fantastic. Well, thank you so much. Of course, we're going to do it again. We'll be teaming up, as time goes on, and talking about these events and watching how the cycles play out, watching how your own forecasts work, and hopefully, learning and teaching as we go along. So, it's exciting stuff, Andrew, and I thank you, for giving us the time and coming on and sharing your pearls of wisdom.
You're very welcome. Thank you, Catherine. It's been fun again.